Good evening, Dr. Olalere and Dr. Malomsky.
Good evening.
Welcome, sirs.
Good evening, my bros. I'm James, sir. I'm loyal, sir.
How far?
I'm fine. I'm fine.
Dr. Olalere.
I beg, help my ministry, Dr. David.
Your ministry is doing well.
In my present time like this, I can't see my asset depleting. I better go.
Your ministry is doing well, just for a short while.
Okay.
You'll be singing another song by the end of this month.
Amen. I started thinking that, oh boy, you want to share. I started thinking that I hope I'm not greedy.
No, I'll tell you when I think it's a good time to start, banking something.
Okay. Some people are saying, advising this guy, the Tesla guy.
Oh, okay. Sorry, I lost him. Good evening, everyone. Good evening. Welcome to Crypto Pulse Weekly. This is a weekly digest of the happenings in the crypto world with some bit of analysis. For today, we'll be talking about the recent decline in the price of Bitcoin, particularly because there's been a lot of, if I may say, uncertainty on the markets, and people have been wondering, is it a good time to sell, or should we have sold week before the last? I would say hold your guns. We're still in the early days, frankly speaking, and there are a lot of metrics that have shown so far that we're just in a fairly decent correction. So in any market, and this is not a prerogative, or this is not particular to the crypto markets, in any equities market, for instance, prices do not go in a straight line. You have periods of correction, and for the most part, the prices go in zigzag. So for that reason, what we're seeing right now is just part of normal price behavior, if I may put it that way. So today, as usual, we'll be taking a look at what's happening on the market in terms of market updates. We'll talk about some key metrics, and then we'll talk about a knowledge transfer of some sort. So because I sort of have a lot of new people that have just joined, especially on the Crypto Pulse Weekly. So I get a lot of questions during the week as regards to, I'm new. What does this mean? How do we go about this? So I'm just going to try to go over what this is all about, especially for the purpose of people that are just joining, and for the purpose of people that are already in, to let them understand, have a good idea of where we are in this bull run. So then from there we'll take question and answers, and we're good to go. So let's look at what's happening on the markets in terms of market updates. As you have probably been aware, Bitcoin has not been able to close above 50,000 this week for various reasons. So one, traditionally speaking, March has been a year for general crashes in the Bitcoin market. So if you take the last 10 years snapshots, you find out that there's only 1 year, which is 2013, I think, that March has been a good year for Bitcoin. Most of the other years, March has always been a red month, including last year, which was 2020. So that sort of speculative fear, let me use that word, has made a lot of people either take profit or hold back on their positions. And for new retail investors, many of them are sold at a loss because of the drastic fall from 58,000 of the week before. But really what's happening is we're having, if I may say, a cyclical correction. If you remember that chart I showed about 2 or 3 weeks ago, that was showing the magnitude of corrections that we're having in the last bull run. In the last bull run, we had about, I think 6 or 8, each with about 40 to 25% or 25 to 40% drop from a new all-time high in terms of correction before, making either 100% or 150% after that. So what we have now is pretty much like the second or the third in this bull run. And it's not so significant compared to the other bull run, because the other bull run, you have 30, 40, 25, 35 regularly. Right now, we're barely able to dip below 30. The last one we had in January was pretty much around 30%. We've not been able to get to 30% in this drop. So 30% should have taken us to 42, 41K region. We've not been able to get to that region, meaning there's a lot of buying pressure that is pushing the price back up. So in as much as the price seems to have drastically fallen, we still have a lot of headroom in terms of upside. And I will explain that there are so many metrics, technical indicators showing that we're just getting started. But another thing that's happening, and I think I've discussed it sometimes in Q3, Q4 last year, is the involvement and the connection to the stock market. So right now, if you're trading stock or involved in stock markets, you know that there's a huge sell-off going on. And that's probably on the back of the fact that people have been, the stock market has been pumping like back to back for almost 5 years now. And everybody is feeling like, we're going to have a crash and we're going to have a crash. And March is usually a good month for crashes for whatever reason, even in the stock market. So now it's almost like investors are anticipating that and are selling off ahead. And of course, when people start selling off in large numbers, it triggers other people to sell off. So that in itself is also pushing down the price of Bitcoin, because what happens is when institutional traders are selling off their stocks, there are a lot of people that have hedged positions, meaning they're using their Bitcoin positions to hedge their stock position. So if the stock starts going down against them, they will withdraw money from their Bitcoin position, which is more liquid anyway, and push it into their stock so that they don't get liquidated on their stock positions. So anytime the stock market crashes suddenly, you tend to see some dips in the price of Bitcoin. But I think largely beyond the aforementioned, the other thing that's also responsible for this is the US dollar index. So if you're into the indices, DXY, which is the US dollar index that shows the strength of a dollar. It's gone to like a 4 or 5 month high in recent, especially today, because there was a very strong job market report from the United States today, which means the economy is doing well, and bond yields as well. Bond yield is 1.5%. It's not gone up in the recent time. So bond yield is a good sign that the economy is doing well. And if you think back to the things I've said in times past about the economy being based on debts, when people are more debt philic, meaning they are more disposed to collecting debts, the economy does well, because the economy itself is based on debt. It's not based on anything tied to any value, really and truly. So the more the people demand for the US dollar, which is based on debt, the more the US dollar goes stronger. So what's happening is, because the job market has gone stronger, there is new demand on the housing market, there is new demand on the bonds market, which is government debts. And what happens is institutional investors are huge position takers on government debts. So when there's a gain in the bond markets, you naturally have institutional investors gravitating towards that. So all of these are contributing to the present price drag. But you need to keep in mind that we still have an intrinsic or constitutional liquidity crisis within Bitcoin itself. So we have limited supply. We have only 21 million. We've done more than 18 million already in terms of already generated Bitcoin. And Bitcoin is not being sold like it was 2 or 3 years ago. As of the last 24 hours, 12,000 Bitcoin have been moved from Coinbase twice to a cold wallet. And most of the people that buy in very large quantities from Coinbase are institutional investors. And anytime you have those kind of movements, you have them in thousands. So they buy. So the last one happened about a few hours ago. Before that, it happened last night. 12,000 Bitcoins bought and moved off the exchange. What that means is that even though the price, is going down, institutional investors are taking position and buying heavily. And many of the volatility we are seeing, apart from all the other things I've said, are newbies or people who just joined in the Bitcoin market and they saw the price crashing and they quickly sold, thinking, "Oh, I'm going to lose all my money." It's not going to happen, especially not this year. I can tell you that. I'm not a financial advisor, like many people will say, but these are facts. Except we have another virus that's stronger than COVID, I don't think anything is going to change significantly on the trajectory of the market this year, which is to go up very significantly. In terms of regulation, we're beginning to see the effect of FCA on exchanges that deal with UK customers. So there's an exchange I'll talk about later called Bybit. They started closing people's account because they said, US, they're Singapore-based exchange, and they said, FCA has banned them from trading derivatives and the derivative exchange. So because in fact, I got one of that because I signed up on that exchange, my phone number. I got a text message from them saying, your phone number indicates that you are a resident in the UK. So according to our terms and conditions, we're going to close your account on the 10th of March or something like that. So that's going on the side. But I think the one that was most important was people were a bit worried in the UK whether the Exchequer's budgets was going to say something about increase in capital gains, but that didn't happen. So it's a bit of a sigh of relief for people there. In terms of overall regulation environment, especially for people in UK, I think we're in good stead. I think when the time comes to talk about how you handle your profits, we'll have a special class for that to talk about strategies on maximizing your returns and not, capitalizing and exposing yourself to unnecessary tax. Not that you're avoiding tax, but to reduce your tax liabilities like the biggest companies in the world do, so that you're not just paying unnecessarily. So that's about regulation. In terms of sentiment, as I said, the slump in the equity market is responsible for what we have right now. But on-chain data, which is data from the big Bitcoin blockchain, suggests that we have impending bullish actions in the offing. And I'll talk about that later as well. So let's go on to the first news. The first news is that about Bybit. Bybit is a derivatives cryptocurrency exchange. That's a big word for new joiners. Derivatives are like products that are designed off original assets. So you can have a gold derivative, you can have silver, you can have oil, you can have derivatives on even currencies. So there are products that are created by market makers, which are like exchanges, that allow investors to trade off the fluctuation in price of the original assets. So the derivatives, you have derivatives like Bitcoin down, like Ethereum down, Ethereum futures, Bitcoin futures. Those are derivatives. They're not the real asset. They're just like trading the prices. So just like for people familiar with the online Forex market, the online Forex market is a largely derivative-driven market because it's not like, for the most part, you keep the money with you when you're trading, but you're trading the price fluctuation of the underlying asset, which is the currency pair. So this particular exchange is in Singapore. They just came out about 2 or 3, it's not up to 3 years. And they're very huge now. Most of the YouTubers are always sharing and talking about them. They've written a letter or sent a message to all their UK customers to say, guys, we're going to terminate your account because UK has said derivatives are banned. As I've said, I've voiced my opinion that I think it was a rather dumb thing. It's just like saying to people that we think you're going to lose your money. So people should stop trading derivatives. Retail traders should stop trading derivatives. People should be at liberty to decide what they want to do with their money. In my opinion, if you've worked hard, the government has taxed almost 60% or 80% of that money before it got to you. The one that you are now keeping aside, they are now telling you again that you can't invest it because we think you are too dumb and you're going to spend it or you're going to lose it. I think it's crazy, but that's that. So Bybit has taken the first move, and I like many of you older guys will observe, exchanges like Crypto.com that used to have bank deposit functionalities with the UK no longer have them. And I've noticed that with a number of exchanges. I have a Coinbase account where they're asking me for what's the source of my money. And I'm like, you asked me this question 2 years ago. Why are you asking me again? Now, because of course, because they're trying to decide whether they can still carry on. Later they said, we can't offer you some of the services we offer you before. I said, okay, that's fine. But that's what's happening. I think I hope the UK won't regret it, because we're already out of the EU, and this is one of those things that I thought could also give the UK a competitive edge. I mean, given the chance, given the premise that UK was already the financial capital of this side of the globe. But we'll see how that pans out. I think in the coming months, they will realize that fully and retrace their steps, just like the funny Nigerian governments. Anyways, let's talk about Bitcoin whales and the accumulation spree. So many a times you hear about Bitcoin whales. I just thought I should talk about it and explain a bit. So there's been an accumulation spree during this dip. I don't have that chart, but I'll try and get it against next week, hopefully. That shows whale accumulation. It's called whale accumulation charts. It's like a bubble chart that shows the price region where whales accumulate the most Bitcoin. So whales are people usually that have 1,000 or more Bitcoin. And as I've indicated on the right here, this is the general classification for Bitcoin holders. So if you have less than a Bitcoin, you're considered a shrimp. If you have 1 to 10, you're still a crab. If you have more than 10 to 50, you're an octopus. If you have 50 to 100, you're a fish. If you have 100 to 500, you're a dolphin. If you have 500 to 1,000, you're a shark. If you have 1,000 to 5,000, you're a whale. And if you have more than 5,000, you're a humpback whale. Humpback whales are usually the biggest whale in terms of size. So yeah, that's just to demonstrate the volume. So people that are considered whales are people who have 1,000 and above. And right now, the number of whale accounts on the blockchain in the last 1 year has more than doubled, actually. I have that report somewhere. It's more than doubled, and they're not selling. But there's a way that on-chain analytics are able to extract when they are buying. And what it shows is during these times when it seems like the market is confused and the prices are dipping, they're massively accumulating, like crazily accumulating. And many of those wallets, they only have like one-way traffic since the inception. Many of them, in fact, almost all of them, the only thing happening to them is more Bitcoins are coming in from the exchanges. None is going out. So many whales are accumulating at this point. And I think institutional investors are accumulating at this price point right now as well. So next time you hear the word whale, you know what it means. It means somebody that has more than 1,000. For the record, I'm not a whale. I'm just saying so that people will not think that I'm a whale. I know that word is being used loosely, especially on WhatsApp chat, but you need 1,000 Bitcoins to be a whale, and I'm not a whale yet. So yeah, that's that about whales and the accumulation. There was an interesting report from Goldman Sachs where they decided that they wanted to get a feedback from their customers. Basically, it was a survey on their customer base. And what happened was they asked them, if they had Bitcoin or what they thought about Bitcoin, what they thought about crypto. And, what came back to them was that more than 70% of their customers were bullish on cryptocurrencies and Bitcoin. And more than 40% reported that they already had exposure to Bitcoin. So these are the guys that were saying in 2017 and 2018 that Bitcoin is a scam to go to zero. It's a speculative risk asset, all sorts of things. The same way JP Morgan CEO said he was going to sack anybody that was found trading Bitcoin in his company, and they were accumulating secretly in the background. So this is just to show what their own customers think in terms of Goldman Sachs, a very huge financial services company. So for their customers to be saying we already have it, it means they are going to see now that they are sort of on the back foot because their customers are already going ahead of them to take positions. What I think will happen is they'll start offering some sort of custodial services or a trust like Grayscale to offer exposures to crypto, which on the whole, I think it's huge. And I will talk about the macros. I will talk about the macroeconomics I hope I remember before we finish this review of the news, to talk about the macroeconomics as it relates to Bitcoin, and this year in particular. Going on to our favorite MicroStrategy, Michael Saylor. My MicroStrategy have acquired more Bitcoins in the last 10 days. So these guys, just for context and for people who do not know them, MicroStrategy is a business analytics company in the US. They provide enterprise services for companies, and their competitors are like SAP and Oracle in the United States. They were the first guys that came out last year to say, we're going to put Bitcoin on our balance sheet because we think it's a good hedge against inflation and it's a good storage of value. That move earned them, a very massive spike in the stock price of MicroStrategy. I think on the whole, in the 1 year period between when they started buying and February this year, their stock outperformed both the Nasdaq and Bitcoin price itself. So since the price have dropped in the last 10 days now, they've added almost about 10,000 or thereabouts Bitcoins. I think they bought again today or yesterday. And of course, some people are saying, oh, the Bitcoin effect is over for MicroStrategy and Tesla because their stock, for instance, MicroStrategy stock fell by 50% in the last 17 days. But the guy didn't mind. The guy is still buying. And I mean, you need to listen to the guy to understand his viewpoint. I think the guy will be like the Bill Gates of the future in times to come, because he not only gets it, he understands why you need to do it. And I was listening to a particular interview that he was having with Bloomberg, and they were saying that why is he so aggressive on putting his company as a publicly listed company, exposing their balance sheet to a speculative asset. That's the way they put it. And the guy said, you need to understand what is happening to monetary supply, and you need to understand what is happening to real inflation, meaning inflation not only based on consumer pricing index. Okay, let's talk about macro. I was going to leave it till later, but I'm just going to talk about it. So when we talk about inflation, we talk about how much has the prices risen for certain items. Now, macroeconomists or economists that deal with countries, what they do is they take a particular view or like a window view of the items on which they're going to base the calculation of inflation. So they consider items, purchasing items like items that people use like television, electronics, things that people buy every day. And based on that, they calculate what you call the consumer price index. And that is what they base inflation on. And that is what the interest rates are calculated on. But what the guy was saying was that is actually not a true reflection of what the inflation is. That you need to incorporate other factors like monetary supply, how much money has been printed by the central government or the central bank in that same year. That because if you don't factor in the monetary supply, then you don't incorporate the dilution factor to the existing money pool that we have in the economy, which makes sense. Because let's say the US government has 50 trillion or $100 trillion in the economy, and in 1 year pumps the economy by 15 trillion. What you have done is you have reduced the purchasing power of the existing 100 trillion by 15%. So what the guy was saying was that true inflation was about 12% on an annual basis, that they had about $500 million in cash reserve. If they kept their money in cash reserve for the next 10 years, that money would be worth less than $10,000 of today's money in 10 years' time. Truly, truly. So what he was saying was that they will have to work extra harder to even be able to retain value for their own shareholders, and that it's already stacked against companies like them that are not as big as Tesla or as big as Apple, that have very huge cash reserves and have very huge supply chain and value chain as well. So for them, the only way for them to survive is to ensure that the money that they have made, which accountants will call retained earning, that's cash on their balance sheet, let's put it in something that can hold the value of the money, so that in 10 years' time, that value is not totally depreciated. But traditionally, people will buy gold or people will buy real estate. And the guy said, real estate, if it depreciates over 100 years, is completely gone. He says gold, if it depreciates over 80 years, is completely gone. And that new technologies can come in that would improve the mining of gold and increase the supply of gold better than the current rate. That so even that is not as strong enough as a storage of value. So I strongly believe in their philosophy, especially as it comes to Bitcoin in particular. And I think it's only a matter of time before everybody realizes what they're doing. So watch out for this guy. Watch out for MicroStrategy. I think that guy might be the Bill Gates of tomorrow. It's about 10 or 20 years younger than Bill Gates anyway. So, but they have been buying like crazy. The first time they bought 250 million. They bought 150 million after that. They bought another 100 million. Then they raised debt for 600 million last December, all subscribed. Then they raised another 1 billion early in February, all subscribed again. So now they're really loaded as concerned Bitcoin. And the philosophy they have is that we're not going to use this money. We are ready to hold for another 100 years. Give or take. They might sell somewhere in between, but what they've done is they've modeled how a public company can survive inflationary assaults on the company's reserve. I think that's this will be stuff for business school for many years to come. I can guarantee that because I think it's just genius. Moving on, Grayscale. If you don't know Grayscale were the ones that started selling Bitcoin to retail traders, packaged to retail traders from 2019 December. So they created what you call a Grayscale Trust, which we usually sell Bitcoin at a premium. So for the most part, they were selling at about 100% premium. For the last 13 months, most of the time they were over 100%. So if Bitcoin was 10K, they were selling at 20K. If Bitcoin was 5K, they were selling at 10K for the most part. But one indicator or one occurrence that people noticed was that anytime their premium drops to, let's say, the true value of Bitcoin or negative, it's usually a trigger for the market to start jumping, because then it looks like it calls for more people to buy at a discount. So there's a negative premium currently that was observed at the end of February for Grayscale Trust, meaning that it's impending that we'll have a market surge, because the last time we had the negative premium for Grayscale was March last year. And of course, we knew what happened. After that dip in March, 6 weeks later, the price of Bitcoin was back to its pre-March levels. So I think we're gonna have a very strong recovery in the next 2 to 4 weeks, especially for the price of Bitcoin. There are on-chain data that already suggests that we might be hitting 100K between end of March and mid-April. If we were to match the price pattern of 2013, we will hit 100K by end of March. But otherwise, I think mid-April is a good estimate of where we're likely to be 100K. And we have correlates with some on-chain metrics. So there's an on-chain metrics called SOPR. It sales out to something. I can't remember the acronym now. But what SOPR does is that it tells you how many people are taking profits from their current positions. And if it goes to negative, it's usually a very massive market stimulant. It means that a lot of people have taken profits, and it's an opportunity for people to buy into the market. So unlike many asset classes that people know about, Bitcoin is one of those assets that has another layer of data that people can mine and then can extrapolate and provide analytics on. So unlike stock that you have to be looking for information about, okay, what's happening with the company, what's happening with the manager, what's their roadmap. For Bitcoin, all you have to do is look at the on-chain data, and there are quite a ton of them. I wouldn't have enough time to go through them if I were to be picking them one by one. You have net unrealized profit. Net unrealized profit is how many people have not taken profit since the last price hack. Anytime net unrealized profit goes to blue zone, what they call euphoria zone, market is going to take a correction. It might even be all the times it's gone into that zone, it has been the beginning of the bear market. So it's almost like the market makers short the markets anytime the price is approaching that region. And that's what happened 2 weeks ago when those miners started selling, because it meant that if we go into euphoria, then we might have a huge correction that might be difficult to recover. So each time we've tried to reach it in this bull run, it's sort of, the market has sort of corrected. So I think we should expect to see a flux in both the price of Bitcoin and actually altcoins in the days and the weeks to come. You all know, okay, if you don't know Christine Lagarde was, I think she was World Bank at some point. She's currently IMF. She's a Bitcoin villain, quote unquote, because she's always saying, Bitcoin is used for nefarious activities, and there's so many issues with the use of Bitcoin. Agrees with blockchain as a technology, but feels Bitcoin is dangerous. And you need to understand the view or the viewpoint of government officials. For many of the times, what they are saying is the position of the institution they represent, not necessarily their personal views. And people tend to misconstrue that with their personal view and think because this person is saying this, it must mean this. But when you sit back and understand that this person represents an institution that has a certain belief or a certain mindset, then you quickly realize that this person is not speaking on their own behalf, they're speaking on their own behalf of, on behalf of the institution. And because the institution has certain interest, they have to say things in the interest of the institution. It is not in the interest of central banks, for instance, for Bitcoin to keep going up, because what it means is that power is generally being taken out of the central banks, and from monetary power, especially, it's been taken from the central banks into the hands of the people. I hope one day we'll have a chance to discuss the history of money and how we arrived at the US dollar, the current economic system that is now about almost 50 years. Yeah, it's 50 years old now. Bretton Woods Agreement is almost 50 years now. Yeah, it's almost 50 years old now. So one day we'll talk about it. But I mean, world bankers and global apex bankers will not be happy. I mean, explains why the central bank chief for Nigeria was yarning dust on national TV about Bitcoin, but I'll pass on that comment. Anyway, let's go on to Ethereum. Ethereum is the number 2 cryptocurrency. I think from now on, I will have a session that will briefly talk about Ethereum. I will talk about number 3 now, which is Cardano. So Ethereum is considered the second largest in terms of market capitalization. It's over 120 something billion. And up until now has been performing quite well till it's reached its recent high. And all of a sudden, the price started struggling, and the price has been so sluggish. 2 things I think has been responsible. One is the ascent of Cardano, which I'll talk about next, and the fact that it seems to be some, I don't want to use the word infighting, but disagreements. So what happens on a blockchain, especially on a blockchain that is a platform like Ethereum, is that developers have voting rights. Their voting rights is based on how much they contribute to the network and how much Ethereum they hold. So a number of Ethereum developers wanted them to implement a particular upgrade this month. Another set of people said, no, we don't want that upgrade. Now, what the upgrade is going to do is basically try to make Ethereum become like Bitcoin. So right now, Bitcoin has a deflationary algorithm. Big word, but what it means is that it helps the currency to reduce its production and stop it from getting oversupplied. So every 4 years, or almost every 4 years, Bitcoin reduces by half in terms of rate of production, so that there is no oversupply or inflation. And you can't change it. So till all the Bitcoins in the world have been mined, it will always drop the rate of production by half. Last halving was last year, May, when the rate of production dropped from 25 to 12.5. The next halving is, I think it's in November 2023, when it will drop from 12.5 to 6.25. And almost every 4 years like that, it keeps dropping till all the Bitcoins have been mined. So what they were trying to do was the Ethereum developers were trying to, or the founders were trying to implement the algorithm or something like that for Ethereum, to put it in a layman's term, but there was a lot of disagreement. But I think there's now a consensus to implement that in July. Now, because that was going on, other relatively large market cap altcoins started, outperforming Ethereum. Coins like Polkadot, coins like Cardano, which I'll talk about next. They started outperforming Ethereum, and now people are beginning to say, okay, how far can Cardano go? How far can Binance Coin go? How far can Polkadot go? Because until that July, we might not see any upgrade on Ethereum. And the reason we need that upgrade on Ethereum, by the way, is because all the applications that function on the Ethereum blockchain use gas, meaning you need to pay Ethereum to use those transactions. However, the more the transactions become, the more the gas fee you pay. So if you wanted to transfer through, let's say a DeFi exchange or a DEX, let's say £100 or $100, it might, on some days, it might cost you almost $100 to do that transfer. So it wasn't making sense, and people are getting angry. Angry and like, what's going on here? Like the cost of transaction is more than the transaction itself. So people are getting put off. And because people like Binance Chain and Cardano are alternatives, even though I would say that Cardano is still a laggard in terms of the actual functionality. So the actual functionality of being able to do what Ethereum is doing will not be fully in place on Cardano until maybe end of this month. But Binance, on the other hand, is like a quick made in China version. They've cloned the technology, provided cheaper alternative, and running projects in parallel. So if you have been following, that was why Binance sort of did almost 300% in 8 or 12 weeks in the last month and before that, because they were trying to solve a problem that Ethereum was still trying to unravel. So Cardano, on the back of that, and because Cardano have been, I don't want to use the word consistent, I will almost say stubborn. The founder had been stubborn in the timelines. So when everybody was putting 2017 as major milestones, they were putting major milestones on their roadmap in 2017, they stuck by their original timelines that, we're going to go. So they have different milestones. I just can't share that. It takes too much time to share their milestones on what they're going to do on their network. And it's just so happened now that the network is maturing at the time where we have this bull run. So they had what you call a merry fork over the weekend? Yeah, on the 1st, on Monday. And basically what that did was to change the network or upgrade the network to allow it contain smart contracts, just like Ethereum does. So smart contracts are like automated lines of code that allows you to do different things. I was trying to explain to somebody day before yesterday that if you think about, there is something they call network layers in network engineering, in CCNA and co. It's about 7 layers. You have application layer, network layer, so many other layers. Now, if you think about the network layer in that model, it's like building applications on a network as opposed to building an application on a server. So many of these blockchain-based networks like Cardano and Ethereum, the smart contracts are like mini applications running out of those networks. The possibilities are immense, and I'm going to talk about that when we're doing crypto trip today, of the possibilities that this technology, this blockchain technology holds. But because these guys have been at this work for a long time, they're now maturing into the real functionality they promised for the last 4 years. So they've successfully done the upgrade, the first upgrade for this year on the 1st of March. They have another one at the end, and at the end of the month, which will now make Cardano capable of holding smart contracts. And they even have like a starter pack that allows you to carry your Ethereum codes and copy and paste it into Cardano smart contracts. A lot of fantastic things happen in Cardano. Too many technical stuff that might not be worth discussing at this time. But that's what's driving the price of Cardano. I think it would not be out of place to see Cardano in the hundreds before the end of the year, because they might say, you know what, because we're upgrading our network, we want to bond some of our tokens. So it might not be out of place to actually see them. For sure, we know that Cardano is probably going to get to $10 very soon. It's already, where is it sitting now? It's already sitting at 1 point something. So it's a matter of time. So another question I got was, you know, what will happen to altcoin season? Again, for context, altcoin season, or altcoins are alternative coins outside Bitcoin. And there's something called altcoin season for people who are just joining. It's a season when all these other coins start appreciating in price against Bitcoin and in fiat value. And what usually happens in this season is that many people are using their Bitcoins to buy these altcoins as a way to generate more income for themselves or more returns, because altcoins have smaller market capitalization. So they have a lot more room to grow than Bitcoin. So, and this usually happens when the price of Bitcoin is sort of in a consolidation and it's not moving, it's just ranging between different price points. So if we stay between 48 and 55, like we're doing now, we will definitely see a boom in altcoins. And I think we might see something this weekend. Having said that, I think from Monday as well, we might start seeing some rapid price movements. I'm reliably informed for people that trade stocks that stock markets will start pumping from Monday because of the current dips that have happened. And you need to bear in mind that the US Senate has passed the 1.6 trillion stimulus on Thursday. I think that was Thursday night or Wednesday night. As a result, that money will start hitting the economy. And like many people saw last year, people were using their stimulus money to just directly buy Bitcoin. In fact, there was a study that showed that there was hundreds of 1,200 deposits on Coinbase around April last year, because people are just using the stimulus money to buy it. And of course, if you bought April last year, you are more than 4x in profits. So there's a lot of incentive to do it again. So expect the price to start heating up from next week. So if you are thinking that you probably wanted to buy and you're not sure whether the price market is still going down, I'm not sure as well, but I don't think the market has enough room to go down more than 45,000 again. I don't think so. I think it will probably range in this 48, 50, 52, 55 before the market starts heating up. And in terms of course, short term now looks like 75K or 100K, because you know how it is. Once you have this kind of correction and it holds for a while, usually the price tends to just, you know, slingshot and catapult into 1x or 2x. So I mean, 2x from where we are right now is about almost on 100K. So it's not out of the question. So in terms of a market capitalization comparison that I usually do, we have now crossed, we are now sitting comfortably above 1 trillion in terms of global market cap for cryptocurrencies, which is something we didn't manage to do for most of last year. And what that means is that at some points, I think when the market was 1.6 trillion 2 weeks ago, that was when Bitcoin crossed 1 trillion for the very first time. Of course, a lot of people took profit on the back of that. Somebody said he just loves the sound of this 100K. Well, it's coming. To be honest, 100K is coming faster than we think. I think we'll probably end up somewhere between 200 and 300K max this year. But it might not happen. It depends. If it happens early, then it means the second wave that will happen at the end of the year may not be as high as the earlier wave. But if we don't get to 300K in summer, then we might as well close the year at 300K. But it's inevitable. There's something called stock to flow model that was created by some data scientists and mathematician. And that thing has been accurate like clockwork since last year. And if I would trail it back to the previous cycles, it's still accurate. So right now, we're about 20% above stock to flow model, which just shows supply to the market in terms of Bitcoin supply and how it's been bought off the market. We're currently above 26% to be accurate, above the stock to flow model. If we continue at that rate, then definitely we'll be sitting over 200,000 by middle of the year. But having said that, we're currently at 1.4. Bitcoin dominance is still 60%. It's been bouncing around 60%. If it drops below 60%, automatically altcoins will take over and start going crazy. So altcoins currently taking in all the money coming into crypto markets, as you can see. In terms of technical analysis, I had the chart open somewhere where it starts. Sorry. I'm not sure which of the charts this is. Okay, yeah, this one. So in terms of what's happening on the markets, let me change this to weekly. So this is the daily chart and this is the weekly chart. Last week was this long, brutal red candle that saw us drop from 58 to 43. In traditional candle technicals, what I mean candle technicals, if you are to interpret this on a purely technical level, this kind of candle will have signified the end of the bull markets on a normal candle. But the fact that this week we've not gone below the market open or the market close of last week is a very strong indicator that that's the end of that correction. So ordinarily, when you see something called a bearish engulfing, meaning that the closing candle is way bigger than the candle preceding it, which is what you have here. This green candle, which was the week before the last, is relatively smaller in size than this one. And the downside drag was actually more than even the lowest of the previous week. And it came as low as 43. But what we've seen is that the market opened around 45 and has just refused to really go beyond that. And it's gone as high as 52.4 thereabouts. So what this is saying is that even though this seemed like a huge correction that should have signaled a long-term downtrend, this invalidates it in a way. If you are a long-term trader, you are like, okay, you want to wait to what happens next week before making a decision on whether the market is going up. But going by what's happened here, you can see that the market's been going up significantly. And because we're in an uptrend, it's inevitable that the market is still going to go up. On a daily chart, however, it does show that we're in the web of what you call the moving averages. So those lines that you see, these many lines in between are price moving averages, the long term, the short term, and the medium term moving averages. And yeah, so you have 99, 25, and 7. So it shows that the movement of price is being within the moving averages significantly for the past 4 days. And even today that it dropped down, that seemed to drop down to 46. It's currently sitting at 48, which is about the price that the market opened. So that tells us that the trend is still intact. And like the regular saying in the market that the trend is your friend until the end. Don't betray your friend. So you can't really think that the market is counter trending. Another thing that helps here is this cloud here is called Bollinger Band, which I've explained in times past, that shows you the standard deviation of price, upper and lower standard deviation of price. And this usually helps institutional investors to know whether the price is getting overheated or is getting overcooled. So right now, we've tried to go to the lower end here, and the price got quickly bought up, which is why I said I doubt if we'll go back to below 45,000 again, because you can see what's happened. We only stayed there for 2 days and we've not been able to go back, even though the upside has not been impressive. I think going by what happened here, we might continue to see the price range between these levels next week or this weekend, and see a breakout next week. Or it can continue for a while and allow the altcoins to move. But generally speaking, I think The trend is still intact. Most of the on-chain analytics have cooled down in terms of oscillation. So you can't say the market's currently overbought because most of the on-chain data has cooled down. And another one that shows us that is actually this fear and greed index. At some point, where was this? I think that was yesterday or day before yesterday. I remember one of my friends showing me this stuff. Doctor, check this, that this fear and greed index is now 43. I think it was on Sunday, or I can't remember. It was a few days ago, and I was saying, yeah, best time to buy, because as I always say, anytime you see, this indicator crossing over below 50, it's always a good time to buy. And I mean, as I said, time tested it now for 2 years. It's infallible so far. Anytime it drops below 50, it's always a good time to buy, because when you buy, you can be sure that you're going to capture some profits. Now, I mean, this is just in the last 3 days. It was somewhere here. I'm sure I saw it at 43 day before yesterday, or on Wednesday, or Tuesday or Wednesday. Now it's back to 77 in the space of 3 days. And you can see last week, you can see it was 55. So it's an indication that the market indices are pretty much reset, quote and unquote. And you can see last week we had this buy, and now we have a mixed signal between buy and sell on our intraday and on our daily sentiment. Lastly, on our position in the markets, as per where are we now in this bull run? Like Dr. Larry was asking whether he's not being greedy. I told him that the time to be greedy is not now. You will get to a time where you will know yourself that confusion has set in, because at that point you'll be wondering, should I sell now? This thing is so big. Am I not going to make more losses? I mean, any losses? If I sell now, the thing continues to close up and continues to go up. Anyway, we're not at that point yet. We were here, and we were getting very close to euphoria before the market corrected. So we are back between belief and euphoria, which is basically what's happening now. Everybody's telling everybody, I think we need to get involved. But for people that are already taking positions, those of you on the WhatsApp group that already bought altcoins, I can say congratulations to you, because I mean, the least you can do is to make 100%, and that's just being very, very, very conservative. That's the least you can do in the next 8 weeks. I remember somebody asking me that 8 weeks was already counting down. Yes, you can count down. I said 8 weeks about a week ago. So let's say we are 7 weeks now. So we are 1 week short. But yeah, I think before that time, actually, we'll see that play out. And as I said, it's important to know when to get to the peak, or when you're close to the peak, so that you can sell off and bank some profits. Whether we like it or not, the market is going to peak out, both on altcoins and on Bitcoin at some point in time, and you need to take profits. What I'm just saying is that we're not quite there yet. We're still on the journey to euphoria. When we get to euphoria, it will be pretty clear that we're there. By that time, even the Uber driver will tell you about Bitcoin. So in terms of Crypto Drip, what I wanted to share before our time runs out was what is this all about? And the reason I wanted to share this today was I keep getting a lot of questions about, I don't really know much about this thing, what's this about? And to make it simple for anybody to understand, what I try to say is, think of the internet in 1997. In 1997, I mean, depending on how old you are, you might not even know there was internet. You might know, but you might just be something far off. Or 1998. In 1998, internet was through phone cables, ISDN cables, and back then, I remember I was in uni, and we had a business center that was in the conference. They called the place Conference Center. And it was very far off from the school. You had to take a bike, then walk to get to the place to read your emails. So if I got emails from my uncle in the US, you pay for a time slot, then you read the email, then you pay again to get the email printed out for you, or you can just get the emails printed out for you and go and read it later. And then you come back maybe another week to come and send the reply. That was the internet back in the 1997, 98, as far as I can remember. Then 99 was Y2K, and everybody was talking about Y2K bug and what's going to happen. But really, that was the onset of internet technology, or that was when internet technology became mainstream. So think of this blockchain technology as an improvement of the internet. It's not actually, it is actually an improvement of the internet, because if we never had the internet, we would never have had blockchain. The blockchain technology only became possible because of the internet. So usually if you had an encrypted technology, you will have it on a server somewhere, sitting in some remote location or across a number of servers in different remote locations and generating data, and people are able to interact with it through a client-server relationship, like you have when you're logging on to Yahoo, or you're logging on to Google, or you're logging on to Hotmail, or you're logging on to YouTube. But what this technology does is it's not putting the application on the servers directly, on the computer systems in those servers. Instead, it is putting the application on the network. What's a network? The network is a connection of computers. So think about it this way. Instead of generating or making an application to sit inside a computer, just like Microsoft Word or Microsoft Office or even Zoom, downloaded Zoom is sitting on your computer as a downloaded application. Instead of putting that application on your computer, on your system, your physical computer, think of it now being propagated on the internet, which is what they try to do, as an example, through the Zoom web. So what it means is that you don't need to put the application on your computer. You can just log into the web and you can use it. So because of web technology, you're able to use the application of the web without using it without having it physically downloaded on your computer. So it's on the back of the web technology that you have blockchain, which allows applications to run on the network without necessarily sitting on each of the computers. So you don't need each of the computers to run. So once you propagate the application on the network and people contribute to that network, as the network grows, the application becomes stronger. What it then means is that each person that wants to join the network and wants to connect their computer to that network. So let's take blockchain, Bitcoin, for instance, or Ethereum. If you want to join the Ethereum network to mine Ethereum, you will need to, number one, download a software that helps you to connect to the Ethereum blockchain on the internet. What that software is basically doing is updating you with legacy record of all the Ethereum transactions that happen since inception, and then keeps you up to date, so that as the transactions are happening, your computer is also contributing to validating those transactions. Now, because this is not something that you need to control, for the most part, you don't need to control it. Once you install the software that helps you connect to the network, you don't really need to do anything, because what the software does is it uses the computing power of your computer to work across the network. And because that works without anybody interfering, it makes the blockchain more efficient than a normal client-server application. Secondly, because it's encrypted, it's not easy to hack, because you're not hacking anybody's system. There is no system to hack. This is just across the network. And because for you to actually succeed in hacking, you will have to replicate the transactions that are happening on the blockchain and have enough computing power to do that. Like they will say, for you to be able to hack the Bitcoin network now, you need an equivalent computing power as all the electricity generated in the country of Ukraine, for you to be able to confidently hack the Bitcoin network. So because of that, this technology has created a monetary network that will change how we view finance, value, and how we actually interact with the internet. So it's on the back of this technology that I've been trying to describe that Bitcoin came. And like I said to someone, the best gift that the founders or the creators of Bitcoin did was to make themselves anonymous. Because if they had mentioned their name, they would be in jail right now. because, I mean, based on the laws of all lands, what they did at that time was a criminal offense. Because no country, in fact, there was somebody that tried it back in the 90s. The guy was jailed back in the 90s. He tried to create tokens and, for people to use between themselves. It was jailed. So being anonymous and being insidiously introduced, it was already far gone before anybody could do anything about it. So the way it started was the guy introduced it to a group of developers anonymously and say, this is a form of electronic digital exchange of value that I think we can use to, service and pay ourselves. And as more and more people adopt it, it will increase in value. So I think the first person, one of the first people that bought stuff with it was that guy that bought, I think it was 1,000 Bitcoin that used to buy pizza back in the days. But before that time, developers used to, use it as payment forms. People used to use it to collect payment for some small developments on the web, until it started gaining traction in the real world. And of course, now it started gaining traction with institutions. So that propagation of the Bitcoin network was what led to other coins called altcoins. Right now, we have over 10,000 of them doing all sorts of things, both real and fake. But altcoins are a product of Bitcoin, because Bitcoin was successfully able to do that. People now thought that, okay, how can we improve on this? People now created altcoins. And one of those altcoins is Ethereum. Ethereum is a platform altcoin, just like Cardano, Polkadot, Atom, or Cosmos, and what's the other name? I can't remember. They are like ecosystem or platform coin that allow you to build application on their own blockchain. So Bitcoin's blockchain was not built to allow applications, was just built to do peer-to-peer transfer. But the improvements that was done with altcoins like Ethereum and Cardano it's now going to allow people to build applications on the blockchain. And because of that, you have things that we call DeFi, decentralized finance, and dApps, which are decentralized applications. Like I said on the WhatsApp group, I moved the DeFi class by 1 week from this week to next week, just so that the new people can, catch up on some of the training we've done in times past. So that is the evolution of the blockchain technology up until where we are now. And this is just the beginning. Like I told someone yesterday, think of this as 1999, and you are being offered Amazon, Google, Tesla, no, Amazon, Google, and which one I was trying to remember, and Apple stocks. So what you are seeing today as tokens like altcoins, like Ethereum, like Cardano, like Polkadot, think of them like Google, Amazon, and Apple stocks being presented to you in 1999, and what the price is today. The prices you're seeing today for many of these tokens will never, ever be this low again, because once the institutions get in and take a firm hold on this industry, the price is only going to go up. So people can tell you all sorts of things outside. All sorts of commentators can say it's a speculative bubble. Everything in this world is a bubble. Even the currency you are holding is based on nothing. It's just based on debt. And they promise that, okay, we're a strong country. If anybody tries to mess with your economy, we'll come and defend you because we have a big military. That's the only thing that is backing the money we're spending. So in as much as the money we're spending is a speculative bubble itself, everything is a bubble. And it's better to catch the bubble when it's still small than when it's already big. I think now I would stop and take questions. I think I've exhausted my time practically. So I'll take questions. If you have questions on Zoom, pop your question, unmute your mic. If you have questions on Instagram, just type it. I'll read it out and I'll answer it. Thank you. Okay. He said I've confused too many people and nobody understood what I've said. Or everybody understand what I've said today. Dr. Lally, go ahead.
maybe people are waiting for you to give them money to invest. Okay. Thank you very much. I just want to ask questions as regards this Polkadot.
Yes.
Polkadot. Yeah, I comparing them to Polkadot, Ethereum based, then Binance chain. Which because yesterday I was trying to look at crypto.com and study the market. I could see that majorly a coin on this NFT. They are the one that were in green yesterday. All majority of coin under NFT they were green, but others, Polkadot, Ethereum, Binance Chain, all majority of them were in red. So I was like, non-fungible token, but probably that's the direction now to make money. But I don't understand that in the news they will just tell you that somebody bought one artwork, 2 point something million dollars. I don't know. I don't understand. So I
Okay.
just think probably there is something we can do there. I find out that this AG coin, I bought it about 2-3 weeks ago, and I've seen 100 again, maybe 2x. So I was like, it's one of the coin there. I think it's number 2 or number 1 under NFT.
Yeah. So you're an advanced user, so you can talk about NFT and DeFi. What I'll do is I'll update the DeFi class, even though NFT is a separate class that I should take separately because it's quite huge. I'll update the DeFi class to include introduction to NFTs and how we can take positions with NFTs. NFTs, non-fungible token. A non-fungible token is a token that is unique and cannot be replaced with another token on the blockchain. So think about all these other Ethereum and all these other altcoins. If somebody sends you one Ethereum, it's one Ethereum all over the world. But non-fungible tokens have unique serial number, if I may use that word. And because they are unique, I can put any price on that particular non-fungible token, depending on what I think it's worth. The reason non-fungible tokens are pumping is because anytime the market seems to be in the grip of institutions, the OGs of the crypto world always find a way to propagate their own market. So last year, when coronavirus hit the market and affected the crypto world, and people are still reeling from the recovery of the price of Bitcoin, DeFi started playing out. If you had joined the crypto world around April, May last year, you noticed that was about the time that the DeFi hype started coming up, and all DeFi coins were pumping like mad. You could get 100% on some in one day at some point. So now, because of course NFTs have become more matured now, you had, apart from NG now, I can't remember the other one now. They were like the premier platforms. They were like the premier platforms for non-fungible tokens.
Yeah, Theta is also there.
In Nigeria,
yeah. So I'll talk about it. Faith, do you want to say something? I see your mic's on.
Kayamata is like a charm. During the olden days, we call it charm. Fetish.
King's Kid, please go ahead.
Yeah, Doctor, thanks for the great session. Or let me say we are very grateful.
I can't hear you properly.
Yeah, okay, can you hear me now?
Yes, better now.
Yes, okay, thank you. Just 2 questions, please. Number one, if you were to invest in just one project, or let me say, if you could just only invest in one project, which you will. And then second question is, I understand that the developer of Cardano to be the co-founder of Ethereum. So I'm wondering why the conflict actually between the two projects. Just help shed more light.
Okay, so let me take your second question first, then I'll take the first one, because that first one, to be honest, I've never thought about that. If I'm going to invest in one, will it should be? It depends on what part of the market cycle we're in. But I'll come back to that question. But let me take the one about Ethereum and Cardano. So what happened was, when Ethereum started, Ethereum Foundation started, you had Vitalik, which was the youngest guy. Then you had these two older guys. One was a professor, the other was a PhD holder, who are also very deep computer scientists. The fracas came when Vitalik did not want to implement an upgrade on the Ethereum network. In fact, there was an original fight between the original Ethereum network and the one we had now. So there was an Ethereum Classic that got hacked. And when it got hacked, there was a lot of conflict on whether they should shut down that network and revert to the period in the blockchain before the network got hacked, so that the hackers will not be able to use the money. But they couldn't agree. There was a lot of conflict on what should we do and what we shouldn't do. So the three of them split up. The Cardano guy went to Stan Cardano Foundation. Then the Cardano guy is a professor here in the UK. The third guy is a PhD, I think he's in Singapore. Then the third guy started Polkadot. So you will find out that Polkadot, Ethereum, and Cardano are very similar in the promise of solution to deliver. However, the tokens and the ecosystem seem to reflect the character or the I don't want to use the character trait or the psychology or the philosophy of the founders. So while Vitalik is a young guy, he's pretty much a geek. These other guys are much more older, maybe because they have understanding of a bigger world. The sort of the approach is a bit different in terms of how they want to go about it. So for Cardano, the guy was like, we promised to deliver an upgrade. We should deliver our upgrade. And then he sort of paced himself and said, we will deliver this at this time. So even though the market was making a lot of noise and bubbling in 2017, he wasn't bothered, and he laid out his milestones and stuck to the milestones, which seem to be paying off now. The Polkadot guy was like, I'm going to deliver on the promise of Ethereum that Ethereum couldn't deliver on. And of course, he now created a different architecture. So technically speaking, they're able to do the same thing, or they're going to do the same thing, but how they're going to do it is different. I can't go into details of the technology and how those architectures differ, but for instance, Polkadot is trying to do what Ethereum will be doing by creating what you call parachains. Parachains are it's like trying to create an offshoot of something and then linking it together. If you growing up, you watch Alien movie, you see what they call mothership, or you played Alien games. We'll have mothership, and you have all the feeder ships that that will jump off the mothership and go and sculpt scales, and then come back to refuel and all that, like a jet fighter, like a jet carrier. So think of the main chain as the aircraft carrier, and then the parachains as the fighter jets on the aircraft carrier. So the parachains are where the various products and projects are being launched. However, they are all linked to the main chain, which is like in the case of Polkadot, the main chain for Polkadot. And then it's all using the same cryptographic technology to validate the projects on those parachains. So even though they promise to do the same thing, how they're going about it is different. So if you ask me, like I told somebody, I sold all my Ethereum to buy other things, including Polkadot, because even though I know Ethereum is going to do well, Ethereum is probably going to go to 10,000 or more this year. But when you consider pure ROI from Polkadot and Cardano, there seems to be more upsides for Polkadot, especially out of the three of them, because Polkadot is it's not the cheapest, but has the smallest market cap. And right now, has the largest number of growing projects. And as a matter of fact, the parachains that are launching on Polkadot, they have been back-to-back hits, even though those are considered high-risk projects because they are initial digital offering. You don't know the people behind it. They're just launching on the, I mean, people are basically paying for those projects from their decentralized wallet. So they're like high-risk projects, but so far, most of them have been doing fantastic. So at the back of that, if you ask me, what coin would you buy? Especially if it's popularly known coin, I would say Kusama. And you say, why Kusama? I would say Kusama belongs to the Polkadot ecosystem. And Kusama is the governance token for the Polkadot test system, or what you call the test network. So before you can launch a project on Polkadot ecosystem, you need to use Kusama. And that's why Kusama's price is always going up. And because it has so much small volume, any increase in price will lead to rapid appreciation. Any increase in capital injection will lead to rapid appreciation in price. So that answers yourself, or your first question. If there is one coin that I'm sure that if you buy, you make decent profits this year, it's Kusama. In fact, you make more profits than Bitcoin actually, because it has very small volume and it's going to have a lot of use case. It already has a lot of use case, but it's going to have a lot of use. And I mean, there are people like Ramat who have already cashed out on their Kusama profits anyway.
Yes, so unfortunately. It's paying me, but it's fine.
Well, I mean, you can still buy Kusama. I was telling someone that I mistakenly sold, which coin was that? It was just a mistake because I thought I was in a particular interface on Binance, and I was somewhere else, so I didn't know that it was my real. Okay, I think it was lit entry, and I just found out that I sold all of it. I mean, in that panic, I just went back and bought everything. And the price I bought it, of course, was a lot higher than what I'd usually invested. But I couldn't even bear the thought of not having any. So I just had to buy back immediately. And yeah, I think you should buy back while you still can, because I think the next 3 weeks are going to be very interesting for altcoins.
Okay. No tech.
Thank you, Doctor.
No problems.
Doctor, good evening.
Yes, sir. Good evening, Albert.
I read from somewhere that Cardano blockchain, they are coming up with something where you can launch through that on it, but you don't need anything like a smart contract. Is that how it is?
Yeah. So think about Cardano and Polkadot as upgrades to existing versions. So for Apple users, I'll take it as think of the conversion from iPod to iPhones. Most of the things that the iPod could do, you could do them with iPhones. And because they had that functionality, iPhone eventually took over all the job of iPods, and iPod just, seemingly just quieted down. Now, the Cardano network, as I said, they have concrete milestones. In fact, let me look for, I think I have that. Okay, I must have closed the chat. Cardano.org. They have concrete milestones on their roadmap to say that this is what we're going to do at so time. But before now, people have not taken them serious because they seem to be going slowly. But I mean, literally, they pace themselves to say these are the things we're going to do at different times. So they've more or less followed their roadmap. So this is what I was talking about. This is the Cardano roadmap. So they have, the Byron, the Shelley, the Goguen, the Basho, and the Voltaire. So these are roadmaps that they've put in place and say these are the things we're going to do at different points in time. Right now, we are at smart contracts, which is Goguen. It's as a result of this Goguen that we had that Mary fork that we had on Monday. So Cardano has a lot more functionalities. potentially than Ethereum. And Polkadot has a lot of more robustness than both of them. Because as I said, Polkadot has relieved the primary network of the problem of carrying all the smart contracts. So what the primary network is carrying is like the smart contract of the parachains. So for Polkadot, it has parachains instead of having smart contracts. But the parachains are now the one that carry the smart contracts. So what that does is, it's almost like it has pushed the smart contract to a third layer to free up the original blockchain layer of traffic, quote unquote. So Cardano is still similar in a way to Ethereum because they're both sitting on the network layer 1, which means all the developments that are happening within that layer. But they have a lot more products. They have a scaling product that allows them to break up the blockchain when there's high traffic and allow for scaling. And then before they get to governance. Meanwhile, Polkadot already has that. Polkadot has parachains for everything. So you have a parachain for governance, which is the KSM blockchain. And that's why the KSM token is very, very expensive and, it's appreciated a lot. And then on the back of that, you now have parachains like Polkastarter, which allow people to launch projects on the Polkadot ecosystem without necessarily, writing smart contracts. And Cardano has something like that, which is probably going to come out at the end of this month, that will allow you to move your code, your smart contracts from Ethereum to Cardano without writing the new code. I hope that answers your question about.
Yeah. Thank you very much. Understood. Then again, those who create these cryptocurrencies, are they computer scientists or what?
Of course, you have to be you have to be computer science or a very strong developer. So it's basically coding at the bottom of it. Computer science, most computer scientists know how to code or know about coding, but you need to be very good in computer science and you need to be a strong coder. Because, for instance, Ethereum has its own programming language called Solidity. So you need to know Solidity at least to program on Ethereum. There are some other blockchains that offer interface like what's this blockchain now? Waves. I think it's Waves. Waves offers a simple interface that allows you to create tokens on their blockchain without coding because it does the coding in the background. Cardano is promising something like that as well. But they only get to it when they get to it.
Oh, okay.
Yeah.
Thank you very much.
No problem.
Again, with this so much, this DeFi coins here and there, is there a way of seeing the fake ones from the genuine ones?
Well, you can take the DeFi course down. There's DeFi course happening next week. That should give you a good idea of how to spot good DeFi from bad DeFi, quote unquote. Okay. Do we have any other questions before we call it a day? Okay, if that's
Hi, Tony. Sorry. Is there a replay of this? I sort of came in. Work is always sorry. Can I watch it somewhere else?
Yes, so I usually have it recorded live on YouTube. I stopped recording on Zoom because they were threatening me with cutting off that I was exceeded my recording quota. So I started recording it on YouTube. So I usually just send out the YouTube link. Give me a few moments. Once this is done, it will record it on YouTube. Then I'll send you the YouTube link and watch it all over again.
Okay, thank you very much.
Okay, what's my take on mining? Well, mining depends on what you are mining. You can mine Bitcoin, you can mine Ethereum, like you can mine any of those other high cap or large cap tokens. Many of the large cap tokens work on the principle of Bitcoin works on the principle of proof of work. I don't want to go into the technicalities of that, but for you to mine Bitcoin, your computer has to actually do the work, and it costs a lot of power. It costs a lot in power generation to mine Bitcoin. And that's why the guys in China, who are the first starters, they usually had their mining rigs beside hydroelectricity sources of power. So, okay, in terms of investing in mining companies, yeah, you can invest in mining companies. It's it's a fantastic bubble to invest in. I remember a company that was not doing anything and they just changed their name. It was a tea coffee shop or something in upstate New York back in 2017. They just changed their name to blockchain and their stock went up like 300%. So yeah, mining company for stock, people trade stock. Mining companies are very, very good stock plays because people who are too afraid of getting exposed to the underlying assets will verily want to get involved with mining companies. And that's why you see some of the mining companies are getting bought up as well. If you've been following the news, a lot of mining companies are getting bought up because the bigger companies are seeing potential future income in stock price hikes. So yeah, mining companies are a good buy. I don't play too much in stock markets. I mean, not at the moment, because I think the crypto market is much more advanced and sophisticated. So there's no incentive for me to. So yeah, but you can invest in mining companies, but do your own research, as they say. But I prefer to invest in the underlying assets, my personal preference. So thank you very much, everyone. I see Shaya, I see Tibamo, I see Temio Shukoya, I see Mr. Badiwa, I see Anu, Salters, Dr. IBK, Mr. Lowu, and Collins. All right, guys, thank you very much. Have a nice weekend. It's been fun being with you today. See you again next week.
Thank you.
Thank you.
Thank you very much. Thanks, Dr.
Thank you very much.
No problems.
Thanks, Demi. We'll have a lot.
Hey, Shandyman, respect.
Respect.
All right, Uncle Demi.
Yeah.
Thank you so much. Thank you.
Baba Dudu.
Thank you, Dr. Demi.
Good job. All right.
All right, cheers, man. Choma, I see you. I see you showed up today. How are you?
All right, bye, Dr. Demi.
Bye.
Yeah, I'm good. Thanks for the training.
No Allah.
All right, later now. I'll chat to you. All right. All right, you too.
Bye.
All right.
Cheers. The great will of Wales. Akinyo.
I throw a salute to
Ekwele Kulabel.
Label. Dr. Lalere ló ń lábẹ́. Dr. Lalere ló ń lábẹ́. Well, àwọn èèyàn tó ń béèrè some of those questions, the technical something. Èmi ò ní interest nínú gbogbo àwọn those technical. Àdébí láti lóyún. Ẹ béèrè question lórí wípé èwo ni kára àbí mo re eléyìí ó ṣe báyìí kíní kan bọ̀ kí ló kàn mí kan. Yeah, the much information that you are able to provide, thank God it's you, it's not me. Èmi ò ní sí. Gbogbo sùúrù tí mo ní òjò ká ka owó lọ. Thank God for people like you.
Oh, well. Have a nice weekend, sir.
Thank you so much.